3 reasons you should have an LLC and 3 reasons you shouldn't. You should not have an LLC to save on taxes. LLCs are what are called pass-through entities, which means that it just passes through the LLC and goes to your personal tax return. It's not going to save you anything on taxes by definition, but there are a few things that LLCs can do that sole proprietorships cannot. You should not have an LLC if you plan on getting venture capital money or if you want to give equity to your employees. By giving equity to VCs or employees, you are making them active participants in the business. VCs don't like this because some of their investors simply cannot be active members to keep their tax status, and employees don't like this because the moment they get equity, they're now taxed as an owner, not a W-2 employee. You should not have an LLC if someday you want to sell your shares and use the Section 1202 exemption to exclude $10 million from the capital gains tax. You should have an LLC because it's going to give you legal protection as an individual. What I mean by this is if someone sues your company, they can go after the assets in the company, but they can't go after your personal assets. You should have an LLC because the LLC will be a separate entity. This means it has its own tax identification number. You can open credit cards and bank accounts in the name of the LLC, and you can also use things like the Augusta rule to pass income tax-free from the business to you. If you want to know what the Augusta rule is, you know what to press. The taxes are much simpler than something like a C Corp. You're going to be able to separate yourself from the business, which makes it possible to sell, it makes it easier to do your bookkeeping, and it's going to protect you from liability.